Do you want to profit from the crypto bull market safely within a tax advantaged account? Because in this video, I'll reveal how to use the wheel strategy to benefit from crypto's explosive growth while managing your risk. Now, if you don't know who I am, my name's El-Gorr. I'm the founder and CEO of Freeman Publications. I've not only written best-selling books on both crypto and the wheel strategy, I've been trading the wheel myself over the past 6 years, including through the last crypto bull run. And in this video, I'm going to walk you through exactly how to do this, the different options available to you, no pun intended, and how you can minimize your risk throughout the entire process. So we're going to talk about playing the crypto boom using the wheel strategy and exactly how you're going to do that. So first things first, I want to give a bit of background as to why crypto has done so well as an asset class this year and really why we are primed for more growth going into 2025. So in 2024, we've had 3 massive wins for crypto as an asset class. The first of those is the spot Bitcoin ETF approval. Now, previously in the US, which is obviously by far and away the largest financial market, we've never had a spot crypto or Bitcoin ETF. We have some futures ones, we've had mutual funds like GBTC, but never an ETF. And so all of those people who wanted to buy crypto within a tax advantaged account, like a retirement account, solo 401ks, Roth IRAs, and outside the US, TFSAs in Canada, stocks and shares ISAs in the UK, we haven't been able to do it. So not only is that a huge amount of wealth owned by millennials, Gen X, boomers, but it's also institutional wealth. We're talking hundreds of billions of assets under management in hedge funds, pension funds, investment banks. And this is client money that wants exposure to crypto as an asset class, but up until the beginning of the year was impossible for those institutions to deliver on. But in January, we got 8 spot Bitcoin ETFs approved. So in just the past 11 months, we've seen $100 billion of assets under management come in to these spot Bitcoin ETFs. IBIT alone, which is BlackRock's one, $75 billion of assets under management, and IBIT owns about 4% of Bitcoin supply right now. So that's number one. Number two is we had the Bitcoin halving in April. Now, if you're not familiar with how Bitcoin works, every 4 years we have an event that's known as the halving. That's where Bitcoin mining rewards are halved. Now, what that does is it reduces the supply of newly minted Bitcoin available and reduces the new supply of Bitcoin into the market. And so naturally, supply and demand, whenever there's a reduction in supply, prices are going to increase. And because of the news that goes around these events and sort of the hysteria that that creates, there is also a bit of price appreciation baked into that. But more importantly than that, these two events combined, so the halving combined with the spot ETF, it gives it additional credibility as a legitimate financial asset. You could argue that pre-2024, crypto was still the complete Wild West and there was no real institutional involvement beyond some VC activity launching new coins. And that's only really happened in the past cycle. So now we have Bitcoin as a legitimate financial asset, as a store of value, as a hedge against inflation, and also as a hedge against any sort of dollar debasement. So we've got institutions, we've got the technical side or the fundamental side, I guess you could say, with the halving. And also gives one more thing, which is generally it's sort of the kickoff for a big bull run. Now this has happened in the past 3 big crypto bull runs. We've had the 2012 halving, led to the 2013 run where we hit $1,000 for the first time. 2016 halving led to the 2017 bull run. Bitcoin almost touched 20,000 in that, and that's really where we had altcoins come to the forefront for the first time. And then we had the mass hysteria in the 2020 halving and the 2021 bull run that followed, all that chaos with NFTs, and we had Axie Infinity and all those gaming coins. It was pure chaos. Every single time though, crypto emerges as a larger and larger asset class. So now we have one more factor to contend with, and that's really what's driven a lot of the positive price momentum in the past week, and that is the election. So as you're watching this now, you will know that President Trump has been re-elected, so he will be the 47th president in January, and he shifted his views on crypto a lot in the past 5 years. As recently as 2019, he publicly spoke against crypto as an asset class. He's basically done a complete 180 on that position. Not only was there discussion of the US building up a strategic Bitcoin reserve, which would mean a lot more buying at a government level, we have pro-crypto people around him. Obviously, there's Elon Musk. We have people like Vivek Ramaswamy. We have JD Vance being the highest ranking public official to own crypto. And this administration is generally seen as more pro-crypto than a Kamala Harris-led government would be. So that's what's driven a lot of the positive price appreciation in the past week. So we had Bitcoin's up about 25% since then, Ethereum's up 30%, Solana's up 37%. We also have traditional assets up a bit as well. SPY's up 3%, QQQ's up 5.4%, and just within our community, Wednesday, November the 6th, the single best day we've ever had trading the wheel. 106 winning trades among our members, and the Discord server was absolutely going nuts that day. It was one of my favorite days running this community over the past couple of years. So the post-halving bull run has generally lasted around the same length of time. So roughly from the halving to the peak of the cycle, we're looking at around 500-ish days. Also, there seems to be a coincidence with elections and the market top coming around 400 days after that. If that were to happen again in a similar fashion, we'd be looking at the end of 2025 in December as the market top. Now, obviously, this is not a scientific prediction, but it's an approximation of how I expect things to play out. Now, first things first, why would we even do this with the wheel? Why would we not just buy and hold crypto? Well, the first answer to that is you don't have to choose. You can always do both. I do both. I own a bunch of crypto, as in I actually own the assets themselves, not just crypto stocks. I own Bitcoin, I own Ethereum, I own Solana. Own that for maximum upside. But you can also trade these crypto adjacent stocks and crypto pure play stocks to get consistent income rather than just unrealized capital gains. If you want a consistent stream of income in just a few hours per week, the wheel is, in my opinion, the best strategy you can employ to do that. You can benefit from the upside of crypto even with the volatility, because the beautiful thing about the wheel is, and especially the way we like to trade it, you lock in your profits very aggressively. So you benefit from volatility even in choppy markets. And we've seen this in 2024. Even as crypto has been all over the place, there's been some really fantastic crypto adjacent stocks that you can use to trade the wheel. And the other part, which will be really, really useful for some of you, is it's tax efficient. You cannot buy and hold crypto most of the time within a tax efficient account. However, trading the wheel, you can do that in a solo 401k. You can do that in a Roth IRA. You can do a variant of the wheel within a TFSA if you're in Canada. So if you're looking for tax efficient gains, then the wheel is going to be a better strategy rather than just buying crypto directly. So there are a few ways to do this, and it goes sort of from most conservative, and yes, I realize the irony of saying conservative when I'm talking about crypto, to highest upside but highest risk. So the most conservative way you can do that is you trade the Bitcoin ETFs themselves. Now, I'm recording this November 12th, 2024. We do not have approval to trade options on the spot Bitcoin ETFs yet. We've had one phase of approval go through, but we haven't had the other two. I expect there to be approval by the end of January 2025. But until then, the best option is going to be BITO, which is a Bitcoin futures ETF. Now, if we're looking at implied volatility as a measure of how volatile these assets are, BITO has an implied volatility of 59%, which is on the higher side, but not obscene like the rest of these stocks that I'm going to talk about. You're still going to get a 5.8% premium for a 30 delta 30-day trade. And the good thing about BITO is you don't need a massive account to trade it. You only need about $2,200 of buying power for one contract. Next step down from there is you're looking at crypto pure play stocks. Next step down from there is going to be your crypto pure play stocks. So you're going to be looking at Coinbase and you're going to be looking at MicroStrategy. Now, MicroStrategy has actually sort of accelerated past Coinbase as a higher beta version of Bitcoin itself. MicroStrategy is roughly outperforming Bitcoin by 2.5x this year because of some of the stuff they're doing with crypto lending and also some leverage activities. But MicroStrategy right now, you're going to get about a 10.5% premium for a 30 delta 30-day trade. It was pretty unattainable up until a few months ago when they did a stock split, but it's doubled since then. So now, once again, you need $32,000 roughly of buying power for a single contract. I personally think they'll do another stock split within the next 6 months. Michael Saylor is a marketing machine, and he knows that retail investor interest in the stock is a big part of the price appreciation. So in order to get the interest in the options market, they will probably do another stock split. Coinbase, you need about $30,000 of buying power. Premiums are going to be lower for that, but they're still extremely high for if you compare them to other stocks on the NASDAQ, for example. You also have crypto adjacent stocks, Robinhood probably being the biggest. You're looking at about a 57% IB level for that, whereas you see MicroStrategy is more than double that. You're going to get about 3.8% premium for a 30 delta 30-day trade, but with Robinhood, much less buying power needed, only about $3,100 for a single contract. Then, if you want to go one step down, you're looking at things like ICE, NASDAQ, CME Group, Interactive Brokers, these large exchanges that theoretically should benefit from a crypto bull run. You're going to get lower premiums. Also, none of those have weekly options, so there's just less flexibility when it comes to your trades. And then you have the true Wild West, which is the Bitcoin miners. You have Marathon Digital, Riot, and CleanSpark. Now, in the past bull run, Marathon and Riot had a lot more volume, but CleanSpark has exploded in the past 6 months. And now it's really on equal footing with the rest of them when it comes to volume. So you now have 3 different Bitcoin miners with lots of volume, weekly options to be able to trade. Now, all 3 of them regularly trade above 100% implied volatility. Not surprising, if you look at their stock price, it's all over the place. Marathon and Riot, you're looking at roughly 7.5% premiums for a 30-day 30 delta trade. CleanSpark, you're looking at right now a 14% premium for a 30-day 30 delta trade. Better news, if you've got a smaller account, all 3 of them require less than $3,000 of buying power for one contract. At the time of recording, who knows, if you're watching this in a couple of months, that may have doubled. But here's the thing. I want to make sure you don't lose all your money doing this. So a couple of rules if you are going to trade these stocks. First of all, be conservative. You can make 30 to 40% annualized gains doing 9 to 14 delta trades. You don't need to be a hero and do, 30 delta or start trading weekly options or, God forbid, doing 0 DTE stuff on these stocks. The second thing I'll say is take your profits whenever they're available. Crypto is an extremely volatile market and you are going to hand your profits straight back if you're not careful. And third, and I would argue most important, don't hold these stocks long term. Once the bull market is over, which like I said, I expect to happen towards the back end of 2025, You do not want to be stuck holding these. That includes Coinbase, that includes MicroStrategy, because these are extremely volatile, high beta stocks. Some of these dumped 80+% in 2022 when the last crypto bull run ended. Your goal is not to make the most money during the upside. Your goal is to come out with the most money even when the bull run is over. So with that being said, if you do want some additional help with this, then we do have a program that helps people trade the wheel for supplemental income. There is a link in the description below if you want to have a chat about that. But if not, just stick around, keep watching the videos, and I will see you in the next one.